Let's now go across to Rahul Arora, the Chief Executive Officer at Nirmal Bank Equities, who's here with us on the show now. Rahul, hi. Thank you very much for joining in. In the face of listless, subdued global cues for the last 2 days, the Indian equity markets continue to march on. Just for the near term, considering there is that weak January seasonality, and typically markets correct in the month of January, what would your near-term outlook be for the markets?
So first of all, morning, and thank you for having me on, and I wish all of you a very happy New Year and to your families and team as well. So I think this reminds me a bit of 2013 when the Prime Minister, then the Chief Minister of Gujarat, was announced as the PM candidate in September 2013. The rupee was at 69 and the markets were a bit listless. But in the run-up to the general elections, the markets had a very ferocious rally and the rupee appreciated by almost 10%. I think something similar could happen. The day the state election results were announced, the Nifty was at 20,000 or just maybe a little under. You've already got almost 10%. I think the other important factor, Reema, will be that I think the RBI will probably allow the rupee to depreciate a little bit because India is now included in the JP Morgan index. Now, when those flows come, the rupee will appreciate quite substantially. So I think there will be an interim period where the rupee will depreciate and then appreciate again. I think net-net you'll probably land up being at around 83, 84 for the year. But that probably plays itself out. From a valuation standpoint, I don't think anything can be justified on an FY25 basis. So if you're a retail investor and coming into the market or even an institutional investor, you need to have at least a 2-year view. Otherwise, if I look at our own broking firm, we track about 185 stocks. I would shudder to think more than 20% would be buys if I value them on FY25. So obviously liquidity has played its part. And I think the overriding theme next year is going to be the rate cuts, right? I think the Fed has already indicated 3 quarters. There are some indications the RBI will follow, if not 3 quarters, by at least 50 basis points. So it's going to be a strong period of the market till May. I would not be surprised if this rally continues till 24,000, 25,000 by May. The question is what happens in the second half.
Sell the news?
I'd say we probably go into more of a consolidation phase because if the worst of China gets behind us in the next 6 months, then that emerges as a competitor for capital in the next half. And let's not forget the US and India both go to elections next year. So the US is also going to be fighting for capital. So I think in terms of major flows, it's going to be US, China and India. But I think India could potentially be more front-loaded. And you could land up seeing a 24,000, 25,000 Nifty by May, and then you go into a consolidation phase for the second half.
I like that. I'm going to take that. 24, 25,000. That's the optimism we need this Friday morning, right? But jokes apart, Rahul, thanks for joining in. Happy New Year to you. I wanted your thoughts on the here and the now. I mean, we are reacting to HDFC Bank's numbers and they're looking really good. I mean, deposit growth of almost 28%, retail deposits up almost 30%, right? This is one behemoth that has not really performed. I mean, it could do better, especially people's portfolios. But your thoughts here?
So I think, Sonia, this is a bank that's going to grow its net interest income, its pre-provision profit and PAT by about 30-35% over the next couple of years. Obviously, this is a merged entity now, so we're strictly not talking about standalone. But these are exceptional numbers. Now, as you rightly pointed out, there was a time that HDFC Bank used to trade between 4 to 5 times price to book. On our numbers, that's probably come down closer to 2.6, 2.7. But that's not just true of HDFC Bank. It's true of HDFC Life as well, where on price to embedded value, that stock post-listing had gone to about 5.5 times. Would I be a buyer in this stock? Absolutely. I think there are no concerns. RBI has already adjusted for risk weights on retail loans. So I think incremental retail lending, if you had to doubt anyone in the banking sector, I don't think you had reason to, but if you had to, that'll get a little more prudent right now. The only thing, Sonia, is that because you are going to go into an interest rate cut cycle, my sense is you might see deposit rates at the short end go up a little bit more. So you might find, and some banks are already doing that to garner incremental deposits. So I think if at all you want to say the worst of the banking sector, though that phrase technically does not apply, would potentially be this quarter because I think NPAs come FY25 will start to look better. NIMs would have bottomed out and credit growth is extremely strong. I think if you look at scheduled commercial banks, they're almost 16-17% growth. If you exclude HDFC Bank and if you include it, it's at 20%. If the Nifty is to go to the levels that I think, it's going to be led by banks and I think it's going to be led by HDFC Bank. So I would certainly be a buyer. We're expecting very strong growth and I don't see any reason why retail or an institutional investor should not be adding at this point.
Rahul, hi, morning and season's greetings to you. Let me say that the beauty of age is that you lays optimism, but some healthy cynicism as well. I don't remember the last time we started a year with the narrative so positive. But look at the updates, and there's no denying the numbers, right? Look at what real estate companies are saying, banks. Look at the way credit offtake is, flying off. Then the rate cut narrative, obviously, which is here. The money flows coming in from foreign investors. We're talking political stability. It's almost too good to be true. It's too perfect. So therefore, let me bring in the healthy cynicism. Are there risks that we should keep in mind, or should we just prepare ourselves for a melt up, like you're saying, in the run up to the elections, and just keep the pessimism and the questioning aside for a bit?
No, I think it's a legitimate point. I don't think everything is, in life, personally or professionally, nothing goes up in a linear fashion. You have moments of consolidation and disappointments at every point in time. The one big call that the whole world got wrong, and I was reading reports by, BCG, McKinsey, and a lot of others, and sell side, buy side, was that the US would go into a recession in the calendar year 2023. That did not happen. Now, does that get postponed to 2024? That's a big question mark. And how long does this China slowdown last, right?
But that's not a worry for the market. Sorry to come in. If they go into a recession, you get 4-5 rate cuts, and the market loves that, right?
No, so I think there is a growth trade-off as well. So our own economist, Reema, expects that, this year's GDP growth will be about 6.5% for FY24. That may come down to 6.2% next year. You don't have to incrementally find negatives if they are not. But yes, the biggest negative is, as I said, near-term valuations. You've had 2 wars hit us in the last 3 years, and crude is comfortably placed between that 75 to 85. So I think next year, if you have a current account deficit at about 1.5%, if your CPI average is about 4.5%, 4.8%, WPI at 2.8%, there may be a bit of slippage on the fiscal side because rural has not recovered to that extent. So you may find some amount of grants to, boost the bottom of the pyramid. But then even so, if it's a 20-30 basis point slippage, I don't think people are going to scoff too much at it. So my only concern would be on the export side, where if you have a global slowdown, what's going to happen? But even then, just to play devil's advocate, if India continues to grow at 6% plus in an interest rate cut scenario, even the global growth slowing, and if you have capital, then you still become the receiver of that capital. So, it's a very famous Devanand song, and I think it's probably apt for the Indian markets right now. Even if there is any wall of worry, मैं जिंदगी का ख्वाब निभाता चला गया, हर फिक्र को धुएं में उड़ाता चला गया.
साथ निभाता चला गया.
Yeah, so
on those lines.
I think you got the drift. So I think that it's always prudent to be cautious. I think near-term valuations are concerned, but no headwinds as such. And if China remains soft, commodity prices are again in your favor. So I think it's enjoy it. I mean,
evergreen Devanand, evergreen Indian markets as well, right? But let me ask you about consumption. That's a space you track very closely. Now, 2023 turned out to be pretty good for consumption names, aided by falling inflation. So gross margins went up, EBITDA margins went up across the board for FMCG companies, and that drove the EPS growth estimates. What about 2024 now? What's the outlook?
So, Reema, I'm still not comfortable paying these valuations for consumer staple companies, and I'll tell you why. Because I think if you look at frontline IT, right, the 5 companies, and you look at, say, the mature FMCG businesses, these have now, I think, come to a stage where to get a 10% plus top line growth is going to be very challenging for them. I'm not talking volume growth, I'm talking about revenue growth. This includes, for FMCG, it includes volume, pricing and premiumization, and for IT, it could include rupee depreciation and volume growth. So if I get into so I'm looking at a 5% pivot, right? So I think in bad times that probably drops down to 2-3%, in good times at 8-9%. At 8-9, if I have visibility of 8-9%, then these companies go back to valuations of 50-55 times. But at this current valuation, to be buying stocks like Lever, Dabur, etc. on the staples, I'm not sure. Consumer discretionary, very bullish. Yeah. Even now, for the next 1 year, completely. You've had G20, you've had the World Cup. You have a very big tourism event later this month opening up in Ayodhya. Yeah. So I think that's going to, have an impact on air travel and tourism as well in terms of hotels. So consumer discretionary, I have no problems, but consumer staples, still not yet. And as to Surabhi's point a little earlier that I was saying where fisc may slip, I think the government will have to do something at the bottom of the pyramid to revive that because, I keep making this point. The reason Lever stock went from 300 to 3,000 is because margins went from 14% to 25%. Lever's top line 10-year compounded, and that's a reasonable time frame to take across cycles, is only 8.8%, and that includes volume premiumization and price. So, and when you talk about all of these, and there's a play on grammage, etc. So, I need these companies to go to about 6, 7, 8% volume growth for me to be comfortable paying these valuations.
Okay, all right, got it. But before we let you go, you spoke about all the big events coming up, and there's the union budget as well. There's a pen and a paper there for you, and there's a huge box next to you.
I see.
Ballot box. That's a ballot box, and that's your attempt to get your message sent to the finance minister directly, so that she can present her budget with all of this feedback in mind. So go ahead.
Yeah, sure.
And also tell us what you're writing.
Tell us what you're writing.
So I think this is the budget actually is going to come out in July, right? This is going to be just a vote on account. But I think there is going to be a situation where you're going to have a little more rationalization in the taxation because you're moving to a stable tax regime. Like I said, I think some government spending at the bottom of the pyramid is what probably looks like it's going to happen. But I think anything incremental is going to be only announced in the budget. But I think the fact that the 2 terms of the Prime Minister have been devoted to regulation and putting India on the global map, I think the next 5 years are going to be all about the economy. And I think given what he's spoken about in terms of indigenization, I think it's going to be a great time for industrials, for banks lending to industrials.
Local
and I
manufacturing.
think, And, I remember Rukhsar Shroff of JP Morgan at one of the CFA conferences, somebody asked him years back, which is the next HDFC Bank? And he said HDFC Bank is the next HDFC Bank. And, and I was having this conversation with someone recently, and we were discussing with an institutional client who's a large holder of Dixon, and he's like, kya karoon? The valuations. And the question was, can Dixon become the next Dixon? And just I'm giving it as a metaphor because, when you talk about China plus one in India, there are only 3 or 4 large cap chemical companies in India. Could you have this go to a situation where this becomes much, much bigger? So I think the government will probably want to focus a lot on manufacturing and infrastructure. But for the moment, like I said, it's predominantly a vote on account. So I think there may be something for the bottom of the pyramid, an indication on taxations in terms of consolidation. But I think the big bang announcements will probably come through June. So that's July. That's probably what I'm going to write down. But
absolutely. Well, while Rahul writes down his sort of thoughts and requests and his wish lists to
that's a long one.
To the finance minister.
I think he's going to spend the next 1 hour.
I really hope she hears him on the tax part. I mean, in terms of rationalization, we go in with that hope every year.
Yeah.
The middle class hasn't gotten too much. The corporates got their corporate, tax rate cuts, which really spurred so much of enthusiasm. But for the middle class on taxes, so I hope she's really listening to that particular number. But as you know, that's the ballot box. Rahul, go for it.
I just put on my top 3.
Just a caveat here, right? Nirmala Sitharaman herself said that don't have any expectations from this one because it's just a vote on account. The main budget will be, of course, post the election. So before that, there's no major announcement. So we have expectations, but she said don't have them.
On a lighter note, extremely on a lighter note, since it's a Friday, this is probably the closest I've sat to.
Hopefully someday you'll be sitting right next to her.
Thank you, Rahul, very much. A great chat as always. And once again, wish that it's a great year for you and your team, and personally and professionally. All the best to you.